If you've heard anything about the one big beautiful bill, you've probably heard it described as a tax cut for business owners. And technically, that's true. But the one big beautiful bill didn't just lower taxes, it changed when deductions show up, how they interact, and who actually benefits. That's the part most people miss. What I'm seeing is business owners reacting to headlines instead of understanding how this bill rewired the rules underneath them. So rather than listing deductions, I want to walk through what the one big beautiful bill actually brought back and why those deductions only work if they're used intentionally, because none of this works in isolation. Let's start with the one that's creating the most confusion: bonus depreciation. Most business owners think bonus depreciation phased out and disappeared. Under the one big beautiful bill, it didn't. Bonus depreciation is restored to 100% for qualifying property placed in service after the applicable effective date under current law. Same concept as before, same definition of qualifying property. But here's where the misunderstanding starts. The issue isn't whether bonus depreciation exists, it's how it behaves once you use it. Bonus depreciation applies by asset class. That means once you take it, you're taking it on everything in that class, unless you deliberately elect out. That election is easy to miss, and it matters more than people think, because expensing everything can look great on paper, while quietly creating losses you can't use efficiently, or wiping out deductions you would have preferred to use later when income is higher. So bonus depreciation isn't really a purchase decision, it's a timing decision. Now, if bonus depreciation came back loudly, R&D came back quietly. For the last few years, domestic research and development costs had to be amortized over 5 years. That rule is gone. Under the one big beautiful bill, domestic R&D can be fully expensed again. Foreign R&D still has to be amortized over 15 years, but US-based research is back to immediate deduction. And this is where things get interesting, because there's a retroactive component here. Some small businesses may be able to amend returns going back to 2022 and deduct costs that were previously capitalized. That's not theory, that's cash flow. But this isn't something software fixes for you. There are eligibility rules, documentation matters, and there are deadlines. Not every business qualifies, and not every amendment makes sense. This is analysis work, not data entry. Which brings us to the third piece that ties all of this together, Section 179. Section 179 didn't just increase, it doubled. The expensing limit is now $2.5 million, with the phase out starting at $4 million. That gives business owners a lot more room to expense assets immediately. But Section 179 doesn't behave like bonus depreciation, and that distinction matters. Section 179 is elective. It's asset by asset, and it's limited by income. Bonus depreciation is broader. It's automatic unless you opt out, and it's far less flexible. Neither one is better. They solve different problems. And when you add R&D expensing back into the mix, you're no longer choosing deductions. You're deciding how income behaves across multiple years. Here's the mistake I see most often. Business owners hear about one deduction and act on it in isolation. They buy equipment, they expense everything, they move on. But these rules interact. Bonus depreciation affects how Section 179 works. R&D expensing affects taxable income and carry forwards. And elections you make today affect flexibility later. What changed isn't just the deductions. Planning came back. The business owners who benefit the most from the one big beautiful bill aren't reacting to deductions. They're designing how those deductions behave over time. That's where the real value is. It's important for a tax professional to take a look at this for you and assess your tax filing and planning situation with the one big, beautiful bill in mind. Click the link in the description to request a tax strategy call. We use a short questionnaire to make sure this is a good fit for both sides. Please like this video and share this to someone who can take away some key points from this video.